And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. It's great to have you share your morning with us. But let's kick off straight on now with the markets. We see the local bourse ended the day marginally higher. Yesterday's bargain hunting in Sapling and some other bellwether equities added about 51 billion naira to the overall market value. So we're still seeing some bullish sentiment there. But at this hour, it's trading marginally up about 0.02%. Then to crypto now. We see crypto had a big jump yesterday, and we see the market able to recover from all the losses we saw previously. The crypto market there, we see Bitcoin there jumping about 8%. We'll drill down on what drove that big jump yesterday, and we're going to drill down on that later on the show. To the oil markets now, we see oil prices rebounded early today, recovering after two straight sessions of losses as expectations of hawkish Federal Reserve talk later in the day, and possible U.S. crude stock drawdowns outweigh China's demand worries. Brent futures firm 23 cents to $76.13 a barrel, and U.S. WTI crude futures that inch about 26 cents to $71.45 a barrel. A possible drawdown in U.S. crude stocks supported prices, as well as a poll among 5 analysts estimating that crude stockpiles fell by about 400,000 barrels on average in the week to June 16th. And the grain markets, now Chicago corn futures rose today as dry conditions in key areas of the U.S. Midwest raised supply concerns and prompted heavy buying. We see soybean and wheat futures were also headed for gains. Corn futures, CV1, that was up about 2.6% at $6.12 per three-quarter of a bushel. The most active soybean contract on the Chicago Board of Trade, SV1, was up about 0.2% at $13.45 per three-quarter of a bushel, while wheat futures, WV1, gained 1.5% to $7.06 a bushel. United Nations Secretary General Antonio Guterres called for an acceleration of Black Sea grain shipments from Ukrainian ports under deal allowing safe wartime exports. And in a quest to ensure access to quality auto spare parts, the Standards Organization carried out a sensitization drive in collaboration with the Auto Spare Parts and Machinery Dealers Association of Nigeria, SPAMDA, to drill down on getting standard products into the market and try to manufacture at some point to build employment in the country. Take a listen.
One day I build $1 billion. Most of you here, when you import your products, you see the factories you are importing the products from. It's nothing to write home about. You can do the same factory in Nigeria. And you make more money in Nigeria for yourself, and you employ more of Nigerians, your brothers, your sisters, and your children in this country. There are so many of them now who have gone to university, who have done all they are supposed to do, but the jobs are not available. Government cannot provide those jobs. But you, the traders, can actually provide those jobs by graduating, like our great people in this country who graduated from trading to industry. I don't have to mention their names, you know. 30 years ago, there are some traders in this market, in this country, and now they are the biggest manufacturers, building billions and billions of dollars of facilities and making more money. A trader can make so much.
We don't hide any of our members that wants to play a fast one, no. Once we get information, we track him down. This is home of quality. Aspanda is home of quality auto spare parts goods. So if you are importing fake ones here, well, you go bankruptcy. Your customers must depend on you. We are known for quality here. I said it here before that if you fake anything here, once we trace it out, our men are on ground. They will fish it out and hand over to the police immediately.
Well, to our first conversation now, from having to pay more for fuel after President Tinubu announced discontinuation of petrol subsidy in Nigeria, it looks like Nigerians have to brace for more price increases as a new electricity tariff is due 1st of July. Expecting about a 40% increase. For now, joining me is Prospect Madufuro Chairman, Rome Gardens Estate Residents Association. Great to have you on the show. Good morning. Yeah, so I guess we can call it a perfect storm at this point. You're having to pay so much for fuel at this time, and now we're expecting electricity tariffs to actually go up. Help us understand this and why this increase is actually happening again. You know, I remember same time last year this happened, and how does it cut across all bands, all classes of customers? Are they affected with this increase?
Okay, thank you for that important question. From what we understand, all the bands are affected by this increase. We are waiting for the Nigerian Electricity Regulatory Commission to come out with the NYTO for 2023, which will highlight the various bands and the increase that is going to happen as a result. Now, why is this increase happening? It is happening because there have been fundamental changes in the parameters that have been used to set the NYTO 2022. The NYTO is the multi-year tariff order, which is what the Nigerian Electricity Regulatory Commission uses to set the wholesale and retail prices of electricity tariff. Now, these are dependent on critical factors like the exchange rate, is also part of what is used to drive that factor. We also have the issue around the exchange rate and the cost of gas prices. Now, we could see from all these parameters, the inflation. So inflation is there, gas prices are there, we have the rates of dollar. So far now, 2022 MYTO was based on the exchange rate of 441.78 per dollar. Now it's, according to I&E window 2 days ago, it closed at 770. Inflation rate for 2022, which the MYTO 2022 was based on 16.7 inflation rate. Today, inflation rate as at May is running at 22%. So these fundamental changes means that there have to be a review of the tariff. But the question is, by what percentage?
I'm talking about, you know, the floating of the naira and inflation rate, you know, playing into this. There's also that talk about, you know, subsidy in the electricity industry. So that pulling out, you know, some subsidy there. Tell us what you know about this.
Yes. So in addition to these parameters that I mentioned, it's still not enough to meet the cost. So government subsidizes close to 50 billion naira every month, the electricity subsector. And that's a huge cost. And we know that the president, a new president in the various market reforms that he has initiated has made it very clear that he wants to do away with subsidy. So this 50 billion naira monthly that, is paid in through subsidizing electricity market. Also, government want to do away with it at the same time. So these are the things that has led to this increase that we're expecting by 1st of July.
And looking at the multi-year tariff order, so that means if inflation, continues to rise, because we've had sticky inflation, for a while now, and, with the floating of the naira, if the naira actually devalues, more going forward, that means we're going to expect more increase in tariff. Is that what this means?
That in effect is what that means. However, we expect the government to come in at some point to set boundaries. We know there have been silent increase of tariffs over the past year, since the year started. They've done it very quietly. For instance, in our estate, there was a change in tariff in March. from what we used to pay. It was done quietly and nobody knew. But I think this one has become very obvious because of the huge jump that is going to happen as a result of the removal of the subsidy in the petroleum, in the electricity subsector. So we expect that the government will look at this holistically, considering the palliatives that needs to be introduced that will allow and cushion the effect of this increment, considering that there's also been a huge increase in petrol prices, a huge increase because of the dollar being floated, and the impact on the masses at the moment. So we expect that the government will not continue to respond to the inflation and increase regularly as it will happen due to the factors of inflation and factors of Naira being floated.
Yeah, I guess the flotation here has a huge domino effect on the economy. You know, at this time, I know I'm paying so much for electricity right now. Can't imagine what a 40% increase will look like. That would cost a fortune. And I know you're involved in, managing estates there, through the Residents Association. How do you see, households, businesses dealing with this? Affordability is a definite concern. How can both segments manage power usage, with this much increase?
Okay, I think there's a lot we can do in terms of the power management to be able to reduce the cost impact. Certainly, affordability is a key issue. One thing is to make sure everybody is metered. There's been a shortfall in the metering rollout, so government needs to make sure that we do away with estimated billing. So, residents and people know how much they consume in electricity. That's one way that this can help manage this impact. And then there should be encouragement of people on use of power. Now, when you look at your load, you can look at what your household usage is. Certainly, there's some equipment, appliances that use more loads than others. A good example is your AC, air conditioners. There's some air conditioners you can do away with, and replace your air conditioners with inverter ACs. Inverter ACs are known to use less power and still give you the comfort you need. They pay for themselves. Yes, they are more expensive, but they pay for themselves over a 6 months period based on the analysis that we have done. So those are ways that residents and businesses can make effort in order to reduce this impact. Other ways could be the use of alternative energy. Government can step in here by providing a soft loan at very low interest so that people can transition to alternative power using solar. We know that it's capital intensive at the initial stage, but it pays for itself over a period. So when residents and businesses can get soft loans to go the route of solar, that also could be a way to manage the impact on this huge change in the tariff.
Yeah, because consumer income is really squeezed, at this time. And there's been a lot of chatter about, compressed natural gas, as a cheaper source of energy. Does that play into power generation at all?
Yes, it does. CNG is very fuel, it's efficient fuel, and it's also clean fuel. In addition to that, it's safe to use. A lot of people are always afraid that, okay, you're using gas and therefore you're subject to explosion. But the truth of the matter is CNG is, when it leaks, it emits straight into the air, into the atmosphere, and therefore it doesn't settle in. So the risk of explosion is very little. Now it also supports captive power solution. We know that one of the big challenges in adopting use of natural gas is the pipelines, which we don't have. So infrastructure is not there. But to ensure that we can use CNG as a better and more efficient use in power generation, government can support through PPP, individuals to set up various CNG locations dotted around the country. That way, individuals can adopt it in captive power to be able to support, and utilize as an efficient means of power generation. Hot estates can come together and, set up a captive CNG plant with an alternative PPP arrangement such that it can generate power at a much lower cost. Thank God for the new Electricity Act that have been signed by the president. It means, therefore, that states can go in and use this technology, use this CNG as an alternative fuel in a captive mode and reduce significantly the tariff that could be paid in turn by residents and stakeholders across the board.
And definitely, we've seen, some people, talking about how they've converted their petrol, generators to CNG, so that they can have those carburetors attached to it, so you can use, CNG, to power your generators. But there are safety concerns. You did mention that, and I did see the Lagos State, government talked about that, yesterday. But how do you, in making such conversions, how do you make sure, you're putting safety, at the fore? Is it just anybody that can just come and, help you convert your petrol generator to a CNG?
Okay, now there are two things here. There is the CNG, which is a compressed natural gas. Then there's the LPG, which is the liquefied petroleum gas. Now, what we are seeing in the cylinders that people are using, changing their carburetor is LPG, which is different from the CNG. CNG, the composition of CNG is more of methane, while the LPG has more component of propane in the gas composition of that. Now, quite importantly, safety is necessary. There need to be standards. Government needs to step in and ensure that all the equipment, conversion kits that are used, that they meet the required standard, such that we can avoid, for those who are converting their small petroleum petrol generators to using LPG, it is certainly has been in existence for quite a while. So this is nothing new. What is happening is that it is now being adopted more widely than it used to be, because LPG is now cheaper than petrol. So it's now been adopted more. But as government, Lagos State government have rightly, stepped in to say there will be safety checks to ensure that, for instance, what's the distance between your generator and the LPG storage tank that you're using. All that needs to be put together in a way that it is safe to use. But it's been in existence, it's been used, and it's just like using gas in your house. At the moment, we all use LPG to cook. If there's a leak somewhere and it's in an enclosure, the chances of you having explosion is much more. So all these safety concerns for the LPG converted generator needs to be taken into consideration. Now, this is different from the CNG. CNG is the storage tank is a bit more stronger and more robust than what we have in LPG. And also, just as we said, it's composed more of methane, which again means that when there is any leak, it emits quite immediately, because it's less dense than air. So all these are the safety that are around the use of CNG. It's majorly for bigger capacity of engine compared to the LPG, which, as you see, is people are now adopting that much more commonly. Yeah. I see it as a good alternative in the long run for residents to reduce the use of generator, but safety must be taken into consideration. And rightly so, Lagos State government is doing that.
Yeah, because the way some houses are set up, it's not easy to actually, have that conversion and have a cylinder, somewhere around, your generators for that kind of setup. But, consumers are really pressed, at this time with squeezed incomes. We've seen, high prices with PMS, and now expecting, electricity tariffs to go up. How much do you think, the average Nigerian consumer can take, at this point? What should the government be doing right now to create that buffer that, that people need at this point?
Okay, certainly government can do a lot. First of all, this electricity tariff that is coming in 1st of July. We request that government will phase it rather than just putting the 40% increase all at once. Let it come in phases. So that way, knowing that there's already, people are already being squeezed as a result of the increase in the petrol prices and floating of the dollar. Government should also bring in buses. For instance, they can partner with the various taxi unions and give them a petrol card, whereby with those petrol cards, they agree with them to keep price at a certain limit, whereby they can now get the petrol card to buy petrol at certain designated filling station at a much reduced price. So therefore, it's not passing the entire increase in price to the consumers, especially on critical routes where workers use to go to work, to go to market. So those are areas government can come in, bringing buses, that can, in effect, reduce the cost. Thank God, Lagos State government, through Oando initiative, has had electric vehicles on the road. That is foresight. Those foresights that can now, be used and roll out more in such a way that prices that people pay on critical routes, to and fro work can be kept at a minimum in order to ameliorate the impact on this cost. So those are, little things government can do to ensure that workers and citizens alike are prevented from, the huge impact that has happened due to this increase at the moment.
Unpacked, then I do hope that there's some kind of, phased increase instead of a one-time, increase, because people are going through a lot, right now. But thank you so much. It's a Prospect Madufuro, Chairman, Rome Gardens Estate Residents Association. It was great having your perspective today.
Thank you very much. Thank you for having me.
Thank you. All right, we'll take a break now. When we come back, AFEX Commodities Market Update is next. Do stay with us. This is Business Morning.
Witnessed this morning at the floor of AGM. At this headwind, a lot of companies are scratching how to make ends meet. Some of them are paying lesser dividend. But if a company, that's based on what they're doing, they're on track, they are doing very well. So the future is very, very bright.
CSCS flaunts the bragging right as being Nigeria's first financial market infrastructure. The company processes securities in electronic book entry form and provides an effective single access point for all post-trade services in the Nigerian financial market, covering all forms of capital and money market securities.
And now for the AFEX multi-market, let's see what happened on the exchange for the weekend. And now, the last trading week, there was mixed performances across key indicators. Turnover fell by 66.23%, closing the week at 35.57 billion naira from 10.53 billion in last performance. Number of deals traded also fell, dropping by 67.53%. The number of deals traded fell by 13.64%, closing at 95 points. It was with this positive performance in the AFEX commodity index. It rose by 0.04%, marginal increase there. But the AFEX export index performed negatively, falling to 228.69 points from 228.72 points in the last trading week. So the volume of contracts traded saw increased volume across maize to price movement now across export commodities. Sesame, ginger, and wheat maintained at 1,247 naira, 986 naira, and 380 naira respectively. Other commodities witnessed mixed performances, with soybean rising by 2.94% and closing at 335 naira. Sorghum that fell by 5.81%. Closing at 282 naira 56 kobo. Paddy rice that fell by 0.30%, closing at 337 naira 30 kobo. Cocoa that fell by 0.08%, marginal fall, closing at 1,887 naira. Cashew nut as well that fell by 0.05% to close at 611 naira 23 kobo. Across grain commodities, maize that rose 6.22% and closed at 217 naira per kilogram. For more information, you head on to AFEX website. You can follow them on all their social media platforms at AFEX Nigeria and at COMEX by AFEX. And now to our next conversation. We see as a major economic activity and source of livelihood to many that lays on the commodity space. It's incredibly important to Africa's socioeconomic landscape. But how do we navigate Africa's dynamic commodity market, unlocking the immense potential of Africa's commodities market? Joining me now is Ayomide Aboduri, analyst, financial markets. Great to have you on the show.
I'm glad to be here.
So tell me, what are some of the opportunities and potential threats to Africa's commodities markets today?
Okay, so like you said earlier, the African commodities market is growing, but it still remains largely unexploited. So this growth has numerous opportunities, and there are also some potential threats that could limit the growth. So we're talking of threats such as poor infrastructure, which is inclusive of inadequate logistics, poor storage technologies, and inadequate power supply. Now, other potential threats include insecurity, which affects how safe it is to move commodities from one point to another. Then also unfavorable policies, and of course, climate change and environmental degradation issues. Now, despite these potential threats, African commodities market still has numerous opportunities. So one is the rich natural resources base. So there's abundance of rich natural resources in Africa, and this offers the African commodities market the opportunity to offer a wide range of securitized commodities other than just agricultural products, which we have. So I'm talking of commodities such as energy commodities, oil, gas, precious metals, and even solid minerals. Also, innovative financial products could be created on the back of these securitized commodities. The UN projects that Africa's population is going to double by 2050. And this is an opportunity for Africa's commodities market because it means there's a growing market on which African commodities markets can thrive. Then lastly, I will say that the African commodities market has the ability to serve as a catalyst for value addition on the continent. So we see a case where the African commodities market is providing substantial raw materials to the manufacturing sector, and then the manufacturing sector process these materials into finished goods for Africans and for potential exports. So if these opportunities are effectively harnessed, they can promote inclusive economic growth, job creation, and sustainable development in Africa's commodities market.
Right. So what is the role of technology and innovation in optimizing operations in Africa's commodity market?
So technology and innovation play key roles in optimizing commodities markets operations in Africa. Okay, one key role is in digitization. So a good number of commodities exchanges and trading boards in Africa do not have their trading process digitized. So what exists there is they have a trading floor where buyers and sellers of commodities come together to meet face-to-face and match trades. And this is unlike what we have here at AFEX, where the placing and matching of trade orders have been fully digitized via COMEX software. Then another role of technology is in the improvement in logistics. So we see a situation where the African commodities market leverages a technology such as blockchain to track the movement of goods from one destination to another. So what this does is it increases the transparency in the supply chain of the African commodities market. Then having established that agriculture is a significant component in the Africa's commodity markets today, agricultural technology and agri-tech innovations such as precision farming, remote sensing, and crop monitoring tools. They help to optimize agricultural processes. Now, these technologies enable farmers to improve their crop yield, reduce post-harvest losses, and then mitigate the impact of climate change. And overall, technology and innovation have the potential to transform Africa's commodities market by increasing efficiency, transparency, and sustainability.
Right, I guess blockchain has a role to play there, and I'm sure at some point artificial intelligence too would also have a role there. But with the global shift towards hard commodities, how is Africa preparing, to tap into this?
So for hard commodities, we're talking about precious metals like gold, silver. We're also talking about solid minerals like aluminum, zinc, iron ore. Now, what is happening globally is that investments in hard commodities are increasing. So let's take gold, for example. Gold is seen as a bellwether for precious metals. So gold has traded at record highs through 2023. And what is driving this is investor sentiment. Investors consider gold a safe haven asset that also provides some form of hedge against inflationary pressures that is predominant today. And as of today, I don't know of any commodities exchange in Africa that actively trades gold and gold futures or related precious metals and hard commodities. However, in the near future, I think we'll likely see more African exchanges trade gold in their own domestic currency. And this is going to be due to the fact that investors in the African capital market are seeking alternative investments.
All right. So, with reference to AFEX now, how are you adapting to your, model to the ever-changing dynamics of Africa's, commodities market?
Like you rightly said, Africa's commodities market is ever-changing with new trends emerging all the time. And there are some key factors that are shaping the dynamics in the markets today. And this include the increasing importance of Africa's regional markets. So intra-African trade is growing, and this is having a positive impact on the commodity market. So for example, the African Continental Free Trade Area, AFTA is expected to boost intra-African trade, and this creates a new opportunity for African businesses to trade commodities within the continent. Now, the trading entity of AFEX, the AFEX Fair Trade Limited, has started a Pan-African expansion and is currently operating in 3 African countries, and there's the hope to expand to 6 more countries by 2025. And the digitization is also a key factor shaping the dynamics. The impact or effect of digitization cannot be overemphasized. It transforms the way commodities are produced and traded. For instance, digital platforms making it easy for farmers to connect with buyers and also for businesses to track their movement of their commodities. And this leads to greater efficiency and transparency in the market. AFEX is building the physical and technology-enabled infrastructure for the continent's commodity sector to provide access to market and to unlock capital for smallholder farmers, processors, and even for export operations. Other factors that are shaping the African market changing dynamics include geopolitical events, policies and governance, the growing population, and of course, climate change and sustainability. And it's important to note that while we provide cutting-edge services across the commodities value chain in Africa, AFEX has a dedicated team that seeks to anticipate potential disruptions in the commodities market dynamics, and then they find innovative solutions to any looming threats. I would like to end with that the AFEX model is not one that is designed to Africa, but one that is designed for Africa. So it is able to accommodate unanticipated dynamics in the African commodities market. Yeah,
we do need tailored moves right here in Africa. Thank you so much. That was Ayomide Abodunrin, analyst and financial market. Thank you so much for coming on today.
Thank you.
All right, we'll take a moment now.
Conversion of waste to energy is the focus of this conference, as many professionals and organizations now acknowledge the adverse effects of carbon dioxide emission on the environment. Lafarge Limited, one of Africa's largest cement producers, is in Lagos to continue its public awareness on green environment and sustainable energy as conversations around renewable energy and green environment are at the fore of this year's conference in its 6th edition.
Our Concrete Ideas journey has been one of collaboration and positive impact. Through Concrete Ideas, Lafarge Africa has over 2 years assembled thought leaders from the public and private sectors to deliberate on policies to promote investment and best practices in the construction and allied sectors.
Technologies to be able to harness this.
The event brings together government officials, professionals and private entities to aid the growth of a green economy and renewable energy in Nigeria and Africa as a whole. Speaking on the sideline, a professional shares the importance of renewable energy.
The renewable energy will first of all help to reduce the carbon footprint, of CO2 in the atmosphere, and also for the organizations. Then number 2 is going to provide a cheaper way of powering those organizations over time.
With a promise to continue investing in environment-friendly projects, Lafarge management sheds more light on the philosophy behind the green project.
It's about reducing our carbon footprint, and it's also about managing waste efficiently and collaborating with different organizations to ensure that our footprint, when it comes to waste, that we contribute our quota into this.
We want to preserve the country, the economy, the environment, and we have to be sustainable. So everything around sustainability, from decarbonization, from waste management, from preserving value of the materials that we produce, improving consumer behaviors, everything. So that's the rationale behind the event.
As platforms like this from the private sector spring up in Nigeria and Africa, the call for more collaboration with governments across board is resounded, with hopes that the United Nations Sustainable Development Goals will be achieved.
Let's head on to the markets now. We have Will Ibong with the details. Great to have you, Will.
Good morning, Laddie.
Morning. I thought it would be about 60K by now. Seems maybe I want too much.
Yes, you're over-ambitious, Laddie. That's what you want.
Right.
Yes, you're just being over-ambitious because the market is doing perfectly well. Yes.
In a market that's jumped so much.
That's a lot already, Laddie. You just have to just hold on to that and let it stay there. Probably, rise on a gradual process, pace, rather than speeding it up and then it's plummeting, probably to...
Not giving us every week a 5% jump every week.
Every week. Maybe you need to make more pronouncements, Laddie.
Right.
Prepare your pronouncements.
I'll watch out for that.
So the equities market traded marginally higher in yesterday's trading session. We saw bargain hunting in Seplat just up about 3% yesterday. It drove the index to close at 0.16% and settling at 59,110 points. Market cap is at the 32 trillion naira mark. Month-to-date gains, year-to-date gains increased yesterday. Month-to-date is at 6% and year-to-date is at 15.3%. That's really massive. Now, we're looking at the total volume of trades yesterday. We saw a decline in the turnover. It was a sea of red yesterday for transactions. Volume traded fell about 34.1% to 588.85 million units, which was valued at about 8 billion naira, and exchange in over 8,000 deals. We look at the sectoral performance as well. We see key indexes in the green, all recording gains. Banking, consumer, industrial, insurance, oil and gas, all up yesterday. We did mention that Seplat pulled that oil and gas sector up. Banking, penny stocks are in, the toast of investors right now. But we look at market breadth is still very positive. We saw about 50 gainers yesterday compared to 19 losers. That shows that there's still a bit of momentum in the market, even though we're seeing a bit of correction in terms of the value of stocks and the type of stocks being traded in the market. Now, looking at the fixed income market, we see the bond secondary market was bullish. That's yields are going down. It contracted by about 2 basis points to 13.8%. Also in the treasury bills market, it was muted. Average yields was unchanged at 6.6%. But we're bringing in Caleb Alimi, his chief dealer, Fixed Income Providence Bank, to give us more insights as to what's going on in the fixed income space. Good morning, Caleb. It's good to have you.
Good morning, Will. Thank you for having me.
Caleb, we're just going to go back to what happened on Monday for the bond auction, the June bond auction. We did see some additions. Could you tell us about that? So with some new bonds that were introduced to the market.
Yes, DMO introduced 3 new papers into the market, the 10-year, 15-year, and a 30-year paper. In their typical fashion, we saw lots of the demand skew to the long end of the curve, the 15-year and the 30-year. And we also saw them sell a lot of that at the long end of the curve. You can see there from the results on screen that most of the demand was at the long end of the curve. They sold a total of, they had on offer about 360 billion in total, but they sold a total of 427 billion to the market, including non-competitive bids. The total raised about 473 billion. In up to date, they've raised about 3.9 trillion. If we take into consideration the oversold Nigerian treasury bills as well, which they've had up to date, they've raised about 3.9 trillion of the deficit that they intend to cover.
Do you see investors, because you looked at the stop rates that was allotted yesterday, we saw that they were able to keep it within the range of 12 to 15% yesterday, in the Monday's bond auction. Do you think investors are satisfied with that, saying that the bid was between 12 to 15%? Less about 17%, but they were able to get it up 15.7%. That's for the long end of the curve. Do you think investors are pleased with the yields, or do you think they'll be demanding for more yields, saying that the governments are trying to, raise more money?
Interestingly, the yield game, it's driven largely by liquidity. Since the CBN said they were going to normalize CRR operations, we've seen more liquidity in the market, and that is affecting rates generally. The more liquidity you have, the more money, the government has available to them. And then it's more like investors have a lot more money to chase fewer securities. So currently, we don't expect, DMO was able to keep those rates below 16%. We thought at the long end of the curve, we'll probably see a cross into the 16% handle. But we can see that even on that particular side of the curve, they were able to bring rates down from the previous stop rate at 15.9 to 15.8 to 15.7 at this point. We think it will largely be driven by liquidity going forward. As much liquidity the CBN leaves in the system will determine how high the yields go, or if the bullish run that has just started would strengthen.
You mentioned the liquidity and the CRL debit, normalization of that. How is that going for banks? Could you share some insights?
The interbank space yesterday opened with about 860 billion. We're waiting for today's numbers, and that we've seen since the pronouncement of the CBN, we've seen day-on-day increase in the CRR numbers. But as the days progress, we'll get a bit more clarity around how that operates, and we'll be able to get more information on how it works. But currently, day on day, we've seen interbank liquidity continue to improve, and that's what we have for now.
So there's no more discretionary debits for the CRLs. Is that it?
No, the discretionary debits, from the last pronouncement, the discretionary debits, we can say, goodbye to that. What we'll have is a normalization of the debits going forward, where on week, if your total deposit liability increases, you get a debit. If it reduces, you get a credit. That is what we expect from the normalization.
Thank you so much, Caleb Alimi, Chief Dealer, Fixed Income, Providence Bank, for sharing those insights.
Thank you for having me.
So if we look at the NASD market, that's your listed market, we did see bullish sentiments there as well. It was up 0.78%, very in positive territory, very strong position there, and to close at 747.71 points. Market cap inched up by ₦1 billion to 1.03 trillion naira. If you look at volume yesterday, except for volume, turnover was pretty low compared to what we had on Monday. If we look at that, we'll see that turnover was low. And then other aspects of it, Ladi, we see that the market is following the path of the NGX.
Right.
Once we see a bullish sentiment, in the NGX, we see that the NASD unlisted market is following suit and
somehow,
not trying to be left behind. It's catching up real fast.
Right.
And so we see that there is there are potentials and possibilities in the unlisted markets for people to just go in there and see how it's being traded.
Not doing too badly at all. Just wondering what the next catalyst is going to be.
For the equities.
Maybe we shouldn't expect anything this week. Maybe next week.
Maybe next week.
Who knows?
We'll
All
see
right.
that.
We'll keep watching. Thank you so much. As Wilder gave us the details from the fixed income market and the local bourse. Now, let's head on to other markets. Now, we see Bitcoin having a big jump this morning, quite unexpected. From yesterday into this morning, we see the sentiment now back to greed with a big jump there. We're actually in fear after staying in neutral for most part of the week. But now we're in greed, 59 points. Quite interesting. Let's look at the top cryptocurrencies we track. Now we see Bitcoin there having a big jump, 8.04% up. This was already playing at that 24,000 level. So some bullish news now in the market, getting Bitcoin there back to 28,000. Not seen this level in about 6 weeks now. Ethereum, 1,820, back on that 1.8 level. 5.35%. We see BNB there. That's a native token for the Binance exchange, $252. That's up 4.29%. And a big mover up also is Cardano. That's been hammered lately. Cardano's 28 cents, up 8.32%. But XRP is not jumping as much as the other ones there. It's just up 2.68% this morning. Let's bring in Michael Nnaji now, financial market analyst. Hello, Michael.
Vladdy, thanks for having me on.
Great to have you, Michael. So I don't know if you expected this big jump. The market was already, tending into fear, and from nowhere, we see Bitcoin's up 8%. What's going on?
Yeah, so like I said earlier, my expected target for the end of the summer is somewhere close to 40,000, 42,000. What's going on is there's been a bunch of positive news coming ever since the SEC announcement about Binance and Coinbase. We're getting basically encouraging news coming from older institutions that are getting into Bitcoin. Just as it looks like the SEC might be closing the window to crypto, it looks like TradFi, traditional finance, is getting into Bitcoin. We just saw last week BlackRock announced their ETF. Basically, they're launching a Bitcoin ETF pending approval from the SEC. The reason why this is exciting is BlackRock has had 500 plus applications for ETFs and had only one rejected. So in terms of probabilities of this one going through, we really do believe this is the ETF that will finally go through, just because of their at-bat percentage of getting things approved. The juggernaut that they are, we don't see them basically filing this for nothing. They don't file to get rejected. So on that front, there's positive news flow coming in. There's an ETF hopefully on the horizon. Also as well yesterday, EDX Markets, an exchange that's backed by Fidelity Digital Assets, Charles Schwab, and Citadel, launched in the US. The unique thing about this exchange is it's not like other crypto exchanges. Basically, the way they work is they don't custody the funds. They just act as an intermediary where people can go on and buy whatever coins that they want to buy. And they just act as a intermediary for they don't actually custody the product, which the SEC likes because it divulges the basically the commingling of funds that is a major issue in crypto. So you have these two positive things happen a week
it looks
after.
I'm talking about, the ETF, at this point. I know some investors are excited, about this, but some say it's actually bad for Bitcoin, as having an ETF for Bitcoin, because it could keep, Bitcoin suppressed for a long time. What do you think?
See, the thing about Bitcoin is it can't be suppressed in terms of traditional markets because a lot of people for the longest time have been saying that silver and gold are traditionally suppressed because central banks and such monitor the growth rate of such assets in order to monitor inflation, and they try to basically suppress it. The difference between Bitcoin is Bitcoin's a fixed asset. So it's not like a gold or a silver where you can, inorganically suppress the price with leverage. Bitcoin is a 21 million only unit supply. So it's very obvious how many Bitcoins are floating. We have on-chain analytics that tells you when the Bitcoin was moved. So even if we were to get to an ETF, we're still able to see the movement of Bitcoin. The only downside to the ETF, I personally think, is the risk of centralization that we run. If the ETF ends up having a huge supply of Bitcoin in its coffers, most likely that could be a point of centralization risk.
All right.
But if they keep buying as much as they want, it just will never have enough. By its finite nature, the centralization issue isn't that big of a deal, because if the Bitcoin ETF needs more Bitcoin, the price will just only shoot up and it will just be more unreachable.
All right, we'll keep watching and see if this ETF actually gets approved. Thank you so much, Michael and Naji. Always great having your perspective. Thank you.
Thank you, Laddie.
All right, let's see what's happening with the top gainers now. We'll see Conflux there, one of those China coins that's up 22.09%, topping the counter there at 21 cents. They get hammered to about 18 cents, so we're seeing a recovery with that. And Pepe, the meme coin there, also getting a recovery up 17.46%. Let's see what's on the losers counter there. We'll see some mostly stable coins showing that traders are trying to get back into most of these risky altcoins, at this point, and moving away from stability of stable coins at this time. So that's how the market is looking. It's back to greed right now for the crypto market. So that's how it's looking today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Flip over to YouTube, click on videos. You can watch all our productions and enjoy what you missed earlier. Thank you so much for watching. I'm Laddie Williams. Bye-bye.